Good afternoon, good evening, good morning, wherever you might be. Welcome to Live with Main Street. I am Anna Sergunina. I've got my colleagues Jim and Liz with us today, and we've got really exciting discussion. How's everybody doing?
I'm doing fine.
Fine. He says fine. Look where he is. I'm doing well. Thanks, Anna.
Yes, welcome, Liz. This is the first time appearance. We're excited to have you on our show. Jim and I have been getting a little old here. Our face has been on there for a while. So thank you for spicing it up a little bit. Liz is a new addition to our team. We're very excited. She's here locally in the Maryland, D.C. area. Here because I'm here in D.C., so that's the connection. But yeah, we're excited to have you here. And if you haven't noticed yet, but Jim has a wonderful background. And yes, it's not a backdrop. So do you mind telling us, Jim, what the heck is going on? And where are you at?
Carol and I are at our villa in Tuscany, and I'm working remotely. Many of our clients know that I work remotely, so you got to work somewhere. Might as well work in a villa in Tuscany.
Oh,
so,
that sounds good. And do they have wine there, Jim?
Anna, you are so silly.
That's my first question. And by the way, our theme for this discussion is investments. So perhaps I was thinking about investing in wine. But first, maybe drinking it. All right, well, let's get serious here, okay? So we're going to just make this a live discussion. We have a few questions that I think would be nice to discuss. And so each of us will take a turn or add our 2 cents to our conversation. Does that sound good?
Perfect.
All right. Well, I mean, this question is it never gets old. So what happens if the market, or what happens if you hear out there that the stock market is crashing? Is there something that our clients should be doing, or should we be doing something ourselves as participants in this game of investing in the stock market, in the bond market, or real estate? Who wants to go first? Jim, since you're transmitting live from Villa in Tuscany.
Well, I'm not worried, Anna, because I have a lot of cash. And as you know, we've always promoted the 3 buckets. Bucket 1, meaning your emergency fund. And if you're doing withdrawals, up to 3 years worth of cash, so you don't have to worry about the stock market. I'd like to share my screen just for a second and show you a really important chart. And this is the stock market going up and down. And it shows people that since World War II, the stock market has never been down for 3 years. So if you had 3 years worth of cash for withdrawals or CDs or other things that don't have any volatility, you probably don't have anything to worry about. So I'll stop sharing now, but that's a great chart to remind people that if you plan ahead and you have reserves, you don't have to worry about the stock market. You need to be in the stock market because that's the only traditional way to beat inflation. Yes, you can diversify into real estate and stuff, but that has liquidity and that has volatility too. So worried about the stock market, plan ahead, know what your alternatives are, and then you can sleep at night.
Yeah, and I was going to also add, maybe turn off that TV or the radio that you're listening to, because it's going to be there, and we have all these other channels to deliver us information these days, right? All the social media, and it's just in front of our eyes. But I think if you have, and we here at Main Street talk a lot with our clients about their goals, right? And Jim talked about the 3 buckets. It's one of the favorite tools to help clients understand that market fluctuations are going to take place all the time. And so we can't be just obsessed about what are we going to do? What should I do today? The market is down 300 points. What does it actually mean to you as an individual if the market is down, whatever it is down? And it's funny because nobody asks us the question, what should they do when the market is up? Right?
Yes.
They go out and buy a villa in Tuscany. So, but yeah, it's the kind of the opposite side of the coin is that knowing your time horizon. I actually talked about this today. I did a little Facebook Live show interview with one of my colleagues, and the question was, and we talked about investments and a lot of other parts of what financial planning is all about. But it's like, understanding your time horizon, I think, is a really, really good concept to grasp our minds around, because then investing will come at a lot easier pace. If you know that maybe your time horizon isn't long, then you may not need to be participating in the market, investing, right? Stock market, for example, referring to stock market here primarily. But if your time horizon is long, as Jim said, go ahead and do it, right? Because the market is never down for a very long time. So it's just
absolutely. And what I was going to add too is when Jim was talking about the 3 years of cash, I'm also thinking about the people that are in the contribution mode. And at this point, when the market's going down and they're dollar cost averaging, that's just an opportunity for them to invest in stock and invest in these mutual funds at a cheaper price. So I think there's a lot of behavioral things that we need to keep in mind, and to realize that stay calm, stay the course, because to jump out now, as Jim's chart, was alluding to, is if you try to time it yourself and you try to get out and then you get back in, you really miss that upswing. You miss the swing when it comes back. And that's why it makes sense to be diversified and to feel confident that you've got goals in mind, you're diversified, and you just have to turn off that TV and keep it moving.
I just read a quote by Warren Buffett recently. I'm not sure what I was reading, but I think it was something like, my favorite holding period is forever. So I'm like, oh, I like that. So, well, speaking of, because in our theme is investments, so we're writing blogs and having a little shows all months long, because I think it's such a big topic in what we do, and a lot of our clients come to us focused a lot on the investments, but our job is to help them understand that there are more to the financial plan than just investments. So, and in all kinds of areas, right here on the East Coast and then West Coast as well, where we have clients, this socially responsible investing comes up a lot, right? And that's nice, right? That people are wanting to do good things and want to invest in companies and businesses and causes that are supporting, whatever it is that they believe in. But so what do we think about, socially responsible investments? And a lot of times, those who think about, and I think millennials are by far the generation that has a lot of interest in those. And Liz and I have lots of younger clients together, and I think we've got that question asked quite a bit. So if somebody's starting out and they don't quite have options to go to, they only have a 401k started, like where do they go to get these socially responsible investments? And are they even something to consider when you're starting out?
Well, Anna, are you asking me that question?
I'm asking you guys both.
Okay. Well, there's new initials now. It used to be SRI. Are you writing this down? It is now ESG.
What's
and
that
do you know what ESG stands for?
No, I don't know. ESG.
Environmental, socially responsible, and governance.
Oh my gosh.
So that's where socially responsible investing has gone to. And there's a lot of traditional funds that excluded violence and alcohol and other things that were perceived as counter-social, but they also looking at what kind of corporations and their board of directors and how they're acting in various manners. And so ESG, if you just Google what does ESG mean, you'll find it means environmental, socially responsible, and governance. And there's more and more funds that are niche funds, and many of them are doing good now in the last 10 years. And so we're getting more and more questions, and people are asking us what should they invest in. And the big family of funds like BlackRock and Vanguard and Fidelity are coming up with very focused funds to help people support their own ethical standards and get good investment returns. 20 years ago, if you invested in socially responsible funds, and there were a few, you had to give up performance. The last 10 years, that is no longer the case. So when our clients come to us, we're prepared to show them some alternatives based on their goals.
Yeah, one of the sites that I've used with clients is Motif Investing, MOTIF. That's one that Anna presented to me. And we've been taking our clients that are interested in what we were calling the socially conscious investments, the responsible ones, and we've been kind of letting them get their thrills sometimes if they don't have many investments outside of the 401k and it's not an option, as Jim was mentioning. We've kind of been showing them that they can get onto that website and pour them, pick a bundle of different things that they're most interested in and most passionate about, and have an opportunity to kind of get their feet wet, because investing is something that we want to educate them every step of the way and make sure they understand, what they're buying and what they're purchasing and the impact of that. So for a lot of people, if they don't necessarily have it open in traditional avenues, they can always, seek an outside source like that and just kind of get a feel for making sure that the things they're most passionate about are also represented in their portfolio.
Yeah, it's a quite interesting platform to actually play in, because I think just like, and I know the beginning of the year was quite a bit of a conversation about investing in Bitcoin and cryptocurrencies, right? So it's the same kind of thing, right? Yeah, have your thrill, play with it, but the majority of your nest egg probably shouldn't be put into something like that. So yeah, there's there's lots of other things, sites like that are available for cryptocurrencies if you want to play a little game, for sure. But yeah, Motif is neat because you can pick your little motifs and build your own portfolio. It's a little play site for sure. But I think we still believe that the core of what you're investing in needs to be diversified across all the different asset classes, and it shouldn't be concentrated anywhere specifically, just because we don't want to put all of our eggs in one basket. So yeah, the other thing that I think we also get a lot in this discussion is, well, at what point do I buy or do I need to buy things like gold or silver, right, or commodities? Is that something that traditionally good to have as part of your diversified portfolio? Because we talk about that, right, with our clients. What does it mean to have a diversified portfolio? So do we have a sense, Jim or Liz, about what is appropriate in terms of these alternative type investments? Jim, go first.
We're going to make him go first every time.
Jim always has to go first because he's
outnumbered.
Life. Is that what you're doing?
Yeah, you're a little outnumbered, so you have to go first.
People frequently ask us traditionally about gold. There's a lot of talk on late night television. Gold has been popular, say, for the last 7 or 8 years. It went up in value quite a bit, and then everybody asked us questions about it. And I responded by, why didn't you ask me 5 years ago when it was $200 an ounce or $400 an ounce? But gold has never been a good investment long term. It's an asset that people keep for emergencies, but I just wonder if the Kroger store is going to take your gold in an emergency. I just don't see that happening, because you have a storage problem to begin with, and they end up with a storage problem too. You can buy securities that are backed by gold. I used to be able to buy dollars that were backed by gold in the old days, but the gold has not been a good long-term investment if you look at the history. Not only that, but most people don't know that gains on gold are taxed at a higher rate. It's not the 15 or 20% capital gains. Gold and other precious metals and stones are taxed at 26%.
Mm-hmm.
So that is not really a lot of savings. You have to give up a lot more when you invest in those gold, or they call them collectibles, the IRS does. So it's never been a really good investment. It does make people feel good because it's been around 4,000 or 5,000 years. But as an investment in somebody's portfolio, probably not a good investment. Commodities, expanding on that, it's been hard for those of us that are fond of indexes to find a responsible index in commodities because they haven't performed well over the years. They haven't been a diversification product. And so Anna and I, have sort of backed off, offering people advice on a commodity index or a commodity fund because it just really hasn't added anything to people's performance over time.
Yeah, I mean, the other thing to add as far as gold does not pay any dividends, right? So for those of you who think that you're going to buy gold and there's going to be some kind of income coming from it, no. If it's gold bars, no. You have to pay for storage, right, somewhere to keep that safe. So perhaps it's something to, I mean, sometimes, Jim, and I think you can say that's true, that we tell our clients that if you want to have a tiny insurance policy against your investment portfolio to make sure that, because some of these asset classes, right, and, for example, stocks, bonds, and commodities or gold, they behave opposite, right, in terms of one is down, one is up, and depending what the market conditions are. So you could have a small insurance policy saying, all right, if the stock market is down, that perhaps the gold will be up. But, probably no more than that, unless you have some kind of a insider knowledge of where, this investment can take off. And that kind of leads us to a final question that I think everybody will really enjoy us answering is there a way we can find a crystal ball somewhere to predict the future? Because I am curious myself, as I have not found one yet, but maybe in Italy, somewhere on a villa, we can see if you can find us a crystal ball.
Yeah, and Anna, when I hear that, it just reminds me a lot of that first question, of this idea of panic and fear and investments and feeling like it's our role to predict what happens next. And, my thought is more of that's where the benefit of working with a financial advisor comes from, is you get to see the big picture. You get to see your finances and your entire, financial life as a whole, and that risk management piece that we're constantly looking at, and, ensuring that you're going to be okay regardless of what happens next. So I think the biggest piece when that happens, instead of searching for that endless crystal ball or that money tree in your backyard or all of it, Loch Ness monster or whatever it is you're after, I think it's really important maybe to take some time and pull out your list of goals or pull out your financial plan and say, okay, where do I stand? What am I trying to achieve? And is this going to really affect me and where I'm trying to get? And I think then you bring it more down to a molecular level instead of getting so fearful about everything that happens in the future. But unfortunately, I have to report that I am not the one who carries the crystal ball.
You don't have it either. Oh, geez.
I don't.
Yeah, I think MainStreet in general is just not going to be the one with the crystal ball. So, I don't know. I've always been a person of a thought that I don't want to know what the future will be. It's just better to be surprised, but I want to do the right things. So, if you do the right things and you have a plan that you can follow, then you put the right strategies around your investments, it's going to be okay. And that's my thought. Well, guys, and gals, we're right about at the time for our discussion today. This has been great. If there were any questions along the way from our viewers, let us know. If we didn't address them by any means, we are happy to catch up. We'll see you next month. I'm not sure where Jim will be transmitting live, but yeah, I appreciate you joining us. Thank you, Liz. Great to have you, and I'm sure we'll do more of these. Everybody, take care and have a good weekend.
Bye now.